Would you rather own 100% of a little grape or 10 to 30% of a massive watermelon? Welcome to the Nine Doors Down Show, where we discuss anything and everything about commercial real estate and investing. Let's get it.
Nine Doors Down.
John Lopez.
Nine Doors Down.
Hi, this is Tony Rose.
Nine Doors Down.
Hi, this is Anthony Pimentel.
Educating, capital raising, networking.
Nine doors down. Nine doors down.
This is called a show.
What's up, y'all? Welcome to another episode of the Nine Doors Down Show. Man, Anthony, here's another international investor who's gone even more international in the last few months.
Absolutely, man. This guy's super knowledgeable for sure. He's our go-to guy when it comes to, storage and due diligence and stuff. So he is a great asset and person to have with us for sure.
Yeah. This guy, I think for us, he symbolizes what we were thinking internationally about how, Canadian investors, they didn't have the double-digit IRRs. And then next thing you know, we meet this guy literally just a couple months later. So this gentleman that we have on, his name is Martin Mei. He is a real estate investor specializing in self-storage facilities and manufactured home park communities. Early on in his real estate journey, he became the top producer of off-market multifamily opportunities on the East Coast, focusing on wholesaling, BRRRR strategy with OPM, flipping, and short-term rentals. After conducting over 80 property transactions, his team built a seven-figure wholesaling business and acquired a 38-plus door portfolio in just 15 months, operating under the name Meily Property Solutions. To continuously provide consistent returns for his investors in today's uncertain times, he's setting up an investment fund and working with top industry experts to develop Class A recession-resistant self-storage assets in the U.S. and repurpose manufactured home park communities to help ease the housing crisis in Canada. For all our listeners that are out there who's maybe traveling overseas in a plane, stuck in traffic on the 405 freeway in LA, or at home doing dishes or taking a shower, let's welcome our boy, Mr. Martin Mei.
Nice. I love it. I love that intro. Quite a mouthful there, but I appreciate the intro. Thank you so much for having me on.
This was only an intro, Martin. I think this is only a small percentage of the information that we know of you, in the last year. So it's definitely a pleasure and an honor to have you on our podcast, man. We look forward to learning from you and spreading the gems with our listeners.
Absolutely, man. And to be honest, the last part of that bio, that's actually thanks to you guys, you and Anthony. The whole investment fund strategy, that's literally purely because of Nine Doors Down.
Oh, man.
Awesome.
Thank you, man.
I appreciate it. Thank you.
Now you're going to develop your own style and flair with your fund. And next thing you know, we're going to be learning from you.
Yeah, there we go. But yeah, let's dive right into it. I'm an open book. So
yeah, let's go, man. So
my story.
You grew up in Canada. Were you born and raised down in Canada?
No, I was born and raised in Beijing. So I moved to North America when I was around 14, 15. Yeah, moved here as an exchange student, but just never really left. Loved the American Canadian culture. Went up to Montreal for university. Got my full-time job there, bought my first property and got into real estate investing full-time right after that. So probably spent about, 10, 11 years in Montreal. And then moved to Eastern Canada where I really, focused on real estate full-time for about 2 or 3 years. Yeah.
Okay. And tell me a little bit about your family dynamics. A lot of Chinese, at least here in the US, a lot of Chinese Americans, they're hustlers, thinking independently, opening up restaurants, opening up literally their own economy, within a few blocks, within just about every metropolitan city. So tell us a little bit about your family background. Did they have an entrepreneur spirit that rubbed off on you?
Not at all, man, to be honest. I will say my dad is that, very stable, very reliable guy that everyone loves. He's really hardworking. He had the same job for about 25, 30 years. He recently actually just retired about 2 years ago. So he moved to Canada from China, finally reunited with me and my mom. So this entire time when I was, in North America with my mom, my dad would just, providing for my mom, working very hard by himself in China. Whereas, me and my mom, we're just based in North America. So yeah, that's the type of background I came from. My mom was very successful as a sales engineer. Her product was actually those roofing products that's waterproof, but she mostly sells to commercial projects and commercial development projects in China. And my dad works in the HVAC business. That was the product that he was in before. So they both had, very stable jobs, very successful at what they did. But by no means were they, trying to do anything entrepreneurial. I think honestly, like what, pushed my journey into getting to real estate investing full time, it's such a cliche by now, but it's that book, right? Rich Dad, Poor Dad. It really just came from the philosophy of, hey, like I have some money saved up from my full-time job. Where do I put this money, right? Do I buy a new development condo, or do I try to get into a little investment property so I can be a small-time landlord? That's where it all got started.
Welcome to the course on raising capital for investments. In this course, we'll cover the following topics. 1. Analyzing your investment strategy. Number 2. Discovering potential investors. 3. Crafting your pitch. 4. Securing your investment. 5. Our cheat code. We'll round out the program with our very own cheat code for getting in front of investors and being ready to pitch your investment opportunities. Take action today. Visit schoolofninedoorsdown.com and learn to attract capital.
Awesome, man. That's a great story. Now, kind of take me through that. Like, did you go to college? You got your W-2. How long were you working? Like, what field were you in? And then you jumped into real estate. Like, how did you find that deal? What made you think that you could just be a landlord all of a sudden?
Yeah, for sure.
Because that'll be a fun story.
So my background was marketing. So when I was in university, thanks to honestly my parents being really open-minded, unlike most other Asian parents, they didn't really force me to get into any field. They're basically saying, "Hey, Martin, like you're your own person. We just want you to be happy. So pursue whatever you like." And at the time, I was really interested in brand management. I was really interested to study how brands are able to create the brand equity to essentially charge the prices that they do for their products and services. And I also thought it would be very interesting to investigate into the consumer behavior, how consumers make their decisions when it comes to, choosing which brands they want to consume, which brands they want to work with or purchase. So that's what I studied. And that was the job that I had was, I was doing marketing for a tech company. And when I was, sharing with some of my colleagues that, hey, I'm looking to, buy a condo with my mom so that we don't need to pay rent anymore. One of the colleagues I was working with at the time at a tech startup was a landlord, and he had a handful of properties, probably like a dozen duplexes in Montreal. I never really, talked about real estate investing with anyone. He always kept things to himself as well. It was only because I brought it up. He was saying, "Hey, Martin, like I always think, I always feel like Martin, you are entrepreneurial, you're very curious, and that, you like to do things well, you like to do things right. I feel like you might really enjoy reading this book called Rich Dad Poor Dad." So he was the one, his name is Dennis. He was the one that introduced me to that book, right? And he was telling me, hey, instead of putting your money in a new condo, you could consider buying, an investment property. You can house hack it, right? You can live in a portion of the property, rent out the rest of it. And this way, you can generate some revenue to pay for the mortgage, pay for the operating expenses. So honestly, that's what sparked the interest for me. And I was able to put a roof over my head, over my mom's head. And also as immigrants, it meant a lot for us, right? The fact that we don't have to pay rent, we don't have to pay mortgage. It really felt like we actually own a piece of, Canada. Just, that little duplex in Montreal. We still have it to this day. It's honestly, not looking back, it's not the greatest investment. I made so many mistakes with that. I way overpaid. I had a lot of emotions in that deal. But it's my mom and I's first co-investment. So there's a lot of emotions in that property.
I love that, man, because a lot of times when I speak with people, like at meetups, and like they always ask for like advice of like, and then I would hear like what their current situation is. And I would say about 9 times out of 10, I always say, hey, have you considered house hacking, because that's how I pretty much got into real estate. However, not everyone is receptive to that. There's a lot of fear, right? That's running through people's minds, and they're too afraid to dive into their first investment. And you said it best. You made a lot of mistakes. It probably wasn't the best investment, but it does correct over time, because the longer you hold real estate, the more it appreciates. What was it about your mindset that you actually took action, where I would say the majority of the people out there, they'll think about it and then they pause, freeze, and not do anything?
So this is what I'm saying, right? Like when I'm talking about mistakes, I'm talking about like the worst possible mistakes you can think of. Like the asking price was, for that duplex, it was 520,000. We offered 600 just in order to have it under contract. And that was mostly because we kept on getting outbid for about a year. And my mom we're just getting pretty sick of it. I wish I could say, oh, we're doing a bunch of due diligence. We knew what we're doing. We're doing, we're getting education from Nine Doors Down University, from Well Genius, from all of these programs. We weren't. We were just wanting to get into a property. We're getting sick of getting outbid. So we're just like, okay, let's just offer a little more. What could go wrong, right? So we got that property under contract. The mentality was really just, hey, like we will be able to figure it out. Like if other people can do it, how come, we can do it? And we didn't really fall into analysis paralysis, because we're just all about taking action. And thankfully, real estate is a very forgiving asset. If I could do it all over again, I definitely would, take some education, at least to save some time, and to pay for a coach, pay for a mentor, to avoid making the same mistakes that other people would have made. To give you an example, like another mistake that we made, the first summer after we owned the property, because we're renting out room per room, my mom and I were scratching our heads. We're like, okay, like what should we do to charge more rent per room? We had this great idea of ripping out perfectly fine drywall out of both units of the duplex, and we're like, let's soundproof every single room, because we want our tenants to feel very comfortable in their rooms, and we don't want them to disturb each other. So we decided to rip out perfectly fine drywall, put in brand new like soundproofing insulation, and we're talking like the soundproofing baits. We're talking about the sono pans, which is really expensive. We're also talking about the resilient bars, the RC bars, and the 5/8, right? So 2 layers of 5/8 of drywall. So all of that costs about $25,000 in total for soundproofing. And by the time, we got tenants in, they weren't paying that much more. They were just like, oh, we can't even tell the difference. And we got an appraiser to come in, because we're trying to refinance and get some money back out. The appraiser was saying, hey, like if you use that money to renovate your kitchen or your bathroom, your property will be worth a lot more. But soundproofing added zero value to your property. So, so just stuff like that, right? That, we didn't know what we're doing at all. We made so many mistakes when it comes to renovations, even managing contractors. My mom, had to sue this contractor because she wanted to go with like the cheapest option out there. And it was like this illegal Chinese immigrant, that was like, yeah, if you pay me like $500, I'll do this for you. It wasn't actually $500, but it was something really cheap. Anyway, so a bunch of mistakes like that. We're choosing tenants, right? We ended up having a tenant that we just having a lot of issues with. We didn't really do proper due diligence or background check on him. Ended up causing a lot of trouble. But thankfully, again, real estate is a very forgiving asset type. I truly think if anyone's trying to get real estate right now, we're getting into house hacking. If you take, some education and apply that, right, without getting into analysis paralysis, you're going to turn out fine.
Awesome, man. That's the best experience, right? You just got to learn it. You just got to do it. Sometimes you can't read that in a book.
Yeah.
But
No, that's it.
so real quick, is Montreal, you said the property is in Montreal. Is that a landlord friendly state or
It's not
tenant friendly?
again, that's just another mistake made. We didn't think of, you guys had the intuition of investing in places like Arizona, Texas. I didn't. That was my first property. I didn't even think about you can buy investment property elsewhere. I live in Montreal. I'm gonna buy a property in Montreal. Ended up being the worst for, landlord friendly laws. So there's even a rule where if you have a tenant over the age of 65, they have the right to die in your unit. You essentially can never get them out, no matter what. There's obviously, rent control, very significant rent control, even worse than California, even worse than Toronto. Yeah, no, Montreal is one of those cities that's known for being one of the most affordable places in North America. but the property prices don't reflect that. The property prices are really high. So, you're nothing really makes sense in Montreal. It's such a unique market. It's mostly driven by, the job growth in AI, the job growth in tech, job growth in production. So there's a lot of population moving there, but because of the rent control, the rents are significantly lower compared to other major Canadian cities.
So,
Yeah, not a
so
great market. If you're listening to this, and you're comparing like different Canadian cities to invest in, I would say Montreal probably isn't the top market there for you.
yeah, Martin, maybe you could double tap on the term rent control. Can you elaborate a little bit more of what it is and how in some markets it seems like the purpose of rent control is like the results are the opposite of what the term actually is phrasing.
Yeah, no, absolutely. I'll actually do this. I'll give a really good example of what I think like a really fair system is. I definitely think in order for a market to have, a very healthy balance, and also a really good relationship, right? Sustainable way of keeping the tenants and the landlords happy. I think there should be some extent of rent control. I think a market without rent control, I just don't think that's sustainable. But I think a market that's doing really well is Oregon in the US. So from my understanding, they have mandatory rent increases every year for all of their properties in the market. I think it's anywhere from 7 or 8% plus whatever the inflation index is for that year. I think that metric is very fair, right? That changes every single year. The tenants know what's coming for them. And the landlords also know that, they're not getting screwed by inflation, that their rents, their business, right? Their business revenue, it's consistently increasing with the inflation levels. However, in places like, Toronto or Montreal, you're talking about, rent control, rent increase of max 2%, 3% per year. That's barely a fraction of the inflation that we saw over the past year, right? So we see a lot of landlords are going underwater, especially if you have, Ontario, places like, Toronto, Montreal, where if the tenants don't pay rent, it takes months to be able to get them out, right? So for those months, how are you going to pay for the mortgage, right? So I would say rent control. I personally believe rent control is really great, to keep the relationship very sustainable. But the amount of rent control, it's the hard part to figure out. And I think the way Quebec and Ontario do it, I just don't think it's fair for landlords at all. It's driving a lot of people out of business. It's forcing a lot of foreclosures, especially pair that with the interest rate hikes, right? Pair that with the fact that in Canada, you can only hold the interest rate for about 3 to 5 years, right? You have to renew your interest rate every single term. So we're seeing a lot of landlords are getting into trouble.
Wait, you know what? Quick question there. When you're talking about interest rates, do you guys have 30-year mortgages? I don't remember if
We don't. So we have amortization periods of anywhere from 20, even up to 45, 50 years with CMHC. So that's a government funded program for multifamily buildings only. But even for that, you have to renew your interest rate every 3 to 5 years. So you can't lock in an interest rate for that long. You can only lock it in for a very short period of time.
So were there landlords that when they refied their rates tripled like in the last year?
Absolutely. That's happening everywhere in Canada right now. Yeah.
Wow. That's that's crazy, man. Every 3 years, it could be amortized for 45 years, you say, but 3 to 5 years and it needs to be renewed.
That is
Oh,
correct.
wow.
That's the term, right, of your mortgage, even though the
That's
amortization period is longer.
yeah,
So
that's
yeah, that's why
nuts.
you see, I mean, you guys are part of the Well Genius family. You guys are connected with quite a few Canadian investors. This is just one of the reasons, right? A lot of Canadian investors are moving down to the US. Another huge reason too, like in Canada, there's just not that many markets, right? There's only 10 provinces, and not really every province is worth investing into. Major markets, the prices are highly inflated. We are seeing a lot more immigrants, right? Canada's a lot more immigrant friendly. So we're seeing very aggressive population growth across the country. So that means the demand for housing is significantly climbing at an unexpected rate. However, the infrastructure that we have, just simply, we can't really keep up with the population increase. So that means, if you're a property owner, you're going to have that consistent, flow of tenant demand. The property prices are going to continue to go up, which is great. However, as a market, Canada overall, it's not quite business friendly, as I shared, a couple of these pointers. Even in my, home market of New Brunswick, right? So like I saw in Montreal, it wasn't a great market. I found out New Brunswick, which is another province in Canada, better price points, better regulations for landlords, and also seeing a lot of growth because of COVID. Because of COVID, a lot of people are leaving the bigger cities, moving to the countryside, moving to the smaller provinces, similar to how people are moving from, California to Nevada, very similar concept, right? So people are moving from Toronto, Montreal to New Brunswick. So I decided to go in there, decide to, build my business there. And, all of, the 80 property transactions, they're mostly done in New Brunswick. But even that, after being there for 2 years, I was like, this is a great market. There's way better control for the landlords. They changed it. They changed it up, right? So just like the rest of Canada, they also introduced a rent increase anywhere from 3 to 7% per year. They made it a lot harder for the landlords. They also banned wholesaling shortly after. So they decided, hey, like if you're doing wholesaling, you're essentially making real estate transactions without a license, and they don't want to do that. So they're essentially making it very hard, right, for you to come out of business.
Yeah, now I can see why you guys like to invest in the US for sure.
Yeah.
Now, take me through after you purchased your first property with your mom, you learned some stuff, managing it, making some renovations. What did you do next? Well, how did you get transitioned to your next business? Just kind of talk through that.
So what was really interesting, was I happened to find, my partner at the time, and she was actually moving out to New Brunswick. That's how I stumbled across that market. Interesting enough, we're just visiting New Brunswick, just as a trip, and we were looking for apartments for her to rent. We were realizing that all the rents were comparable to how much I could charge in Montreal. However, the property prices were about, a fourth or a fifth of how much properties go for in Montreal. I was like, this doesn't add up. So I didn't let her rent anything. I was like, hey, let's just buy something here. Like I'm gonna refinance my property, and we can, joint venture into a deal where you're gonna live in New Brunswick. I'm gonna, refinance my property in Montreal, and we're gonna, become landlords together, because properties there, at the time it was very affordable compared to, the rest of the country. This was, right around COVID times, right? So that's really where that thought really came from. We also saw that, most of the rental options in New Brunswick, they were in really bad conditions. It was, a lot of slumlords, they didn't want to do any repairs and maintenance, but the properties were still going like that, right? There's just so much demand for housing there. We further did some research. We realized that, the part of the reason is there are two major hospitals in Moncton, New Brunswick, in that market. There's also multiple universities, and it's also a city that's perfectly bilingual. So that's actually the only province in Canada that's fully like 50-50 bilingual. So like English and French, right? So you attract people from, English speaking countries and English parts of the world. But also at the same time, you attract, people from Africa, people from France that want to attend secondary education in French. So because of that, you ended up having, a really great pool of tenants, mostly made up of international students, of hospital workers. And comparing to the rest of the country, the minimum wage there is also a lot lower. So a lot of call center agencies actually decide to set up their shop there. So, Bell Canada, Blue Cross, all of these companies that have their, call center agencies set up in Moncton, New Brunswick. Industrial for the same reason, right? A lot of industrial jobs there. A lot of government workers are also based there. Logistics, it has one of the biggest ports in Canada. So all of these reasons are driving the growth for the demand for housing. So, after doing that research, we're like, hey, like this is truly like a golden gem in Canada. And again, this is back in 2020. So we decided to just like pack up our car and we fully moved there. We were just like, let's, go after off-market opportunities, because we realized that everything on the market, there was a bunch of interest coming from Toronto, a lot of interest coming from other big cities. It was really competitive already. And that's when we learned about, hey, like you can structure off-market deals. You can, find distressed sellers. That's when you can structure a win-win situation for every party involved. And that's when you can find, your own deals, right? This way you don't have to compete with other buyers. That's really where that whole idea came from. So we just wanted to find properties for ourselves, keep, the properties that we like for ourselves, and wholesale the rest to other investors that also like the market. They also like what they saw, right? Part of like what we did that was really instrumental to our success there was we started creating a lot of content. We're like, hey, we have so many questions about this market. No realtors there were really, doing anything to promote it. It's a very small province. It'll be the same as, someone from California moving to Nebraska or moving to North Dakota. Like all of our friends thought we were crazy. They were like, why are you moving there? Like, what do you see there that like the rest of us don't see, right? So we were just like, okay, coming from Montreal, we have so many questions about this market. So let's write them all down and let's interview local market experts, right? So we had questions like, how do you do a duplex conversion in Moncton, New Brunswick? Or what are the short-term rental demands in Moncton, New Brunswick, right? Or what are the tenancy laws, right? Like how are they different? How come there's no rent control? So we started interviewing property managers, local contractors, local investors, like in this format, right? In the Zoom format, uploaded the content on YouTube, ended up attracting, other people that were interested in that market. And guess what? We were the only people talking about New Brunswick. Even the local realtors weren't, right? So through those content, we were able to attract, a lot of buyers for our wholesale operation, but also a lot of joint venture investors for people that were interested in New Brunswick. That's honestly how we like blew up the business, right? We grew from 0 to around 1,500 buyers over the course of 2 years with absolutely $0 in advertising. We were simply just producing content, trying to add value to ourselves, trying to add value to people that are watching our content.
Martin, this story is phenomenal and inspirational. And listening to you reminds me of when one of the passive wealth through assets meetups last year here in Vegas. I remember you got on the mic and you were talking about your self-storage deal that you had at the time. And one of your slides, for me, it hit home, and it was so funny because having Filipino American parents, for myself, I was always taught, keep your nose down, listen to your elders, get a degree, get a good job, get a career, retire from that company. And if you do any investments or do any side businesses, don't brag about it. Keep it to yourself, right? And you got to a point where people actually did not like you out in New Brunswick because you were putting up billboards of like, I will buy your houses. So you created a blue ocean for yourself several years ago. Tell me about the importance of marketing, because I think a lot of people, when they first get into this business, they're afraid of sharing the gospel with others because, for one, they're probably afraid of what those people are going to think of them. Two, they don't want to show off and they want to appear to be humble. But why in this business is it so important to market yourself?
Yeah, because otherwise you're just a nobody, right? Like nobody would give you deals. Nobody would give you money to partner up. So for me and my partner at the time, we moved to New Brunswick. We were absolutely nobody. We just owned that overpriced duplex that we overpaid for, that barely cash flows, right? That was really our only exposure to real estate. And by no means were we market experts at all, right? We barely knew the market. But we just wanted to, find answers for the questions that we had. And we wanted to just put that content out there to essentially add value to other people that were also interested to learn more, right? That's really where that came from. That was really our only intention, was like, hey, like, how come nobody's talking about how great this market is? I felt like, like the local realtors were failing the rest of the world. We're like, this is a gold mine and nobody knew about it, right? So you're 100% right. That was fully a blue ocean strategy. We also realized that there's no competent wholesalers that were operating in that market, and that there was a lot of interest, right? From talking to realtors, we're like, hey, like, we made a couple offers on the fourplex or a duplex. And they were like, hey, like, how many other offers are there? There are 12 other offers, there are 15 other offers, and most of them are coming from Toronto. But guess what? They were having the same issues, right? They knew very little about New Brunswick. They don't have boots on the ground. So realize we can be the boots on the ground. But in order to really establish that credibility and that trust, you need to be able to educate, right, these buyers, right? So we wanted to come from a place where, our intention is that we want to educate them. But at the same time, once you educate them, once you teach them something, that's where you can add, instant credibility, right? So that's also where that came from. Like people, after a couple of videos, people already saw us as market experts, even though we were just like the best students of that market, right? So I'll say without marketing, if you don't put yourself out there, real estate is such a, it's a business that's built on relationships, built on trust, and it's also built on, credibility, right? So by putting yourself out there, that's what really helps. And I was actually just having this conversation with Roderick, my business partner, like literally right before this interview. So we're doing exactly what we did for New Brunswick, but for our self-storage and mobile home park venture, because we want our SEO to be all about when people look up Martin Mei and Roderick Moy, we want a countless content about self-storage, about mobile home parks on there. And the only way to do that is by producing original content and also by getting on other people's platforms, such as their podcasts, or getting on industry, publications. I think that's where my marketing background also really helped to give me this fundamental understanding of just how important it is to put yourself out there in this business.
That's awesome, man. I mean, yeah, wholesaling is a tough gig. I mean, there's a lot of marketing involved for sure, a lot of back and forth. It's a lot of work. But how did you get into wholesaling single family? Is it just single family homes majority or anything?
Yeah, so that was the interesting part, right? Most of the wholesalers in Canada, pretty much like 99, honestly, like all of them. Like I personally don't know of any wholesalers in Canada that specialize in multifamily. We were actually the only ones that did multifamily, because we like in Canada, data privacy laws are very different. It's very hard to find the actual owners of the property. So when wholesalers send out mailers in Ontario, in like the major markets, they send out to, wherever the property is, right? They send a mailer to that. Whereas we figure out a way to find the actual owner, right, through the property tax address. So there's no list that you can buy in Canada. It's very different from the US. So that was our competitive advantage, was that the fact that we had access to like the actual ownership. So if the owner lives in Vancouver, but they own the property in Moncton, they're getting a mailer in Vancouver. Something as simple as that, it's impossible to do in Canada. So we were able to figure that out, and we hired, a couple of VAs, pay them, $3 per hour, but we paid them 2 years to compile every single property record in New Brunswick, in the entire province that we're looking at. So we're able to, we have a database of like these property records, right? So we also realized that if people are investing remotely, they don't want to deal with single families, right? If they're investing, 10 hours away, they don't want to go through all that trouble just to have a little duplex or just to have a little semi-detached, right? They want at least like a 4-unit building. They want like a 6-unit, 10-unit building. So our specialty became smaller multifamily, deals. So we kept the best deals that we like for ourselves. For the deals that don't check our boxes, but are still phenomenal discounted opportunities, we'll pass it on to other investors that are on our buyers list, right? So that's how we build a buyers list on that. And honestly, that's what really opened up a lot of doors for us, right? When we're dealing with these bigger investors, coming from Toronto, to them, it's more of a portfolio play, right? They just want to have a portfolio in Eastern Canada because they also saw the market opportunity there. And that fully paid off for them tenfold, because, New Brunswick has been the market with the highest appreciation year over year over the past couple of years now across Canada.
Wow, that's awesome. What is how did you transition from, wholesaling, single family, now you're saying multifamily, into self-storage? Like what got you intrigued in self-storage?
So one of the partners that I had, we bought a bunch of doors together. Again, these are just smaller multifamilies, right? Like I know for you guys, like 9 doors down, you guys are investing into these massive multifamily opportunities. But at the time, we were just focused on like smaller multifamilies. The more we scaled, the more we realized, even though we have proper systems in place, right? We have property managers, the best in the city. We actually work with all of the property managers that we had in our local market to test them out, right? And we land on one, consolidate all of our portfolio to them. But we still realize that whenever there's a tenant turnover, the repairs and maintenance, whenever something breaks, right? And things always break when it comes to, human tenants living in your buildings, it eats away all the cash flow that you're supposed to make. So even though, our strategy was we buy discounted properties, do renovations, do the BRRRR model, pull the money back out, pay back the investors, and therefore we have no money left in the deal, and therefore we just have the property cash flows every single month, right? Even though our investors' money are pulled out, we realize that from an asset management perspective, smaller multifamilies are really hard to scale, and they're very problematic when it comes to asset management. So we started going to, other events, to essentially educate ourselves further. And we came across, self-storage as an asset type. We're talking to, these operators, and they're telling us like they have, these are American. So the events were in Florida. And these were older American guys that were sharing that they have, hundreds and hundreds of doors. They want to pass it on to their kids because they want to retire, and the kids want nothing to do with their multifamily portfolio because they're like, we don't want to be landlords to like hundreds of families. And one of the gentlemen also owned 12 Subway franchises. So he's like this very successful, restaurant and franchise owner. And all of them, were trying to get into self-storage, right? They're at later stages of their life, and they were just trying to get into an asset type that's easier to manage, that's easier to control, and also with fewer headaches. So that's where that came from, right? So my partner and I, we were just so deep in the weeds of like asset management, dealing with a lot of headaches, dealing with renovation, dealing with contractors. We're like, wow, we thought these, American guys, these older guys, that's how we're going to end up being. But look at how miserable they are, right? Their kids don't want anything to do with their portfolio, and they're trying to get into self-storage. So that's really where that came from, the initial spark of interest, right? And then I did about 10 months of research in terms of, okay, can I do this in Eastern Canada, right? Like I did the same thing. I essentially skip trace every single property, self-storage facility in Eastern Canada. So New Brunswick, Nova Scotia, PEI, looked up every single facility, find the owner, find out the ownership profile. And I realized that most of, the Canadian facilities are already institution owned, right? So they're backed by private equity companies, they're backed by REITs, they're backed by, nationwide operators. And the smaller operators, the mom and pops, their facilities are, essentially, it's really just a garage that repurposed into a self-storage facility by putting, plywood. It's not really to the quality of what we see in the US. Also because, the US, we just have 10 times the population in the US compared to Canada. Way more opportunities down here, way more demand for self-storage. I made a decision that, hey, if we want to do self-storage, if we're trying to target, mom and pop operator, and we're trying to find these mismanaged facilities, the best way, the best market will actually be in the US, right? So that's where our journey to Las Vegas started, and that's where I met you guys. So that's kind of, the full circle of how we ended up in Vegas. John, when we first met, that was literally like us, like 2 weeks in into that market, just trying to figure it out, like what the heck we're trying to do there, right? And at the time we got into this like development deal because at the time the interest rates were very low, and development is super straightforward in self-storage. Takes around 10-11 months to build, right? Sheet metals and concrete, super fast to put together. And once you have it as a REIT managed, you can get public storage to manage it, you can get CubeSpire to manage it. They're going to treat it as one of their own facilities, and by year 3, year 4, you're likely reach 85, anywhere from 85 to 92% occupancy. That's when you can start preparing for exit. So super straightforward business model, and that's what we decided to get into at the time. That was a year ago, more than a year ago now.
I love that, Martin. That story of like how you transition. It's a testament of like how you created opportunities for yourself. And as far as like self-storage, I'll tell the story. So anytime me and Anthony gets a self-storage opportunity, we always send the deal to Martin because his napkin style of underwriting is super quick and super detailed. So a lot of times, when we send an address to Martin, like he gives us like a full-blown report within like 8 hours, and it's just like unbelievable. And so we trust this guy's knowledge of like a market research. But here in the US specifically, what markets are you targeting, and what makes those markets attractive for you?
Yeah, for sure, man. So our philosophy is, we honestly look nationwide, but we mostly go for tertiary markets with a lot of proven economic developments from the private sector. So we're, looking at where Tesla, where, these semiconductor companies like Intel or Samsung are investing money into. We're also looking at, population growth data. We're looking at the self-storage saturation, right? So if the market is already too saturated, with REITs and also with other self-storage operators, that means, that essentially can't really keep up with the supply, right? So we tend to stay away from those, but we go after, these tertiary markets that's still underserved, but are absolutely blowing up, in terms of outside investment and also organic population growth. So those are usually the markets I'm going after. And we look for opportunities, there. We look for these mismanaged mom and pop operated facilities where we can come in, either improve the marketing, improve the revenue optimization, and therefore improves in the overall net operating income. A huge part of our asset management strategy is actually to also adopt automation tools, such as self-checking kiosks, such as, Da Vinci locks, where, essentially it's super, super self-sufficient. You don't need to hire, human property managers on site. You can essentially just pay a handyman about $500, right, per month per facility to take care of, the general maintenance for you. So that way, usually we're able to really make the property management piece, right, that line item a lot more efficient compared to how they're currently doing. Pair that with, increasing the revenue. That's usually how we look at these opportunities. And thanks for saying that, John. Like I would say, when we were in New Brunswick, we realized that a lot of our, weaknesses were in financial reporting. A lot of our weaknesses were in, overall asset management. And that was, me and Lynn, right? Just me and Lynn and also our immediate team of employees at the time. And we realized, okay, we really needed someone strong in the financials to help us. So we really needed a CFO, right? So that's where Roderick, my really good friend from university, came in. So he has, he was a financial analyst for the Hudson Bay Company. That's, the oldest retail company in North America. Actually, they manage Saks, Fifth Avenue, and he also used to work for Restaurant Brands International. They manage Tim Hortons and Burger King and Popeyes, right? So he did financial analyst for those companies, and so we decided to bring him in as our CFO to really help us, manage the asset management piece, especially from the financial perspective. So that's where, my strength when it comes to acquisition, when it comes to deal analysis, pair with his asset management skills and his financial analysis. That's how I think, we're a stronger team than ever before, and we truly have complementary skill sets. So I think a huge part of that is realizing, hey, like, what really sucked for me, right? What did I really suck at? And how do I, improve that? How can I provide a better experience for my investors? And how can I make sure that, the business I have this time is truly sustainable and that it's not going against the wave, right? Because like the business we're in, we're wholesaling. I quit my job, right, for wholesaling. And honestly, in hindsight, it's a little short-sighted because I didn't realize, hey, like wholesaling, government actually doesn't want you to do wholesaling. Whereas what we do now, self-storage and mobile home park, that's supporting, affordable housing, right? That's solving the affordable housing crisis. And that you're providing great value for the investors, but also you're working with the local municipalities to make sure that, you're providing more affordable housing for Canadians and Americans. So all of these, we're very much like riding with the wave, right? And realize, this way we're a lot more sustainable and that, we can really treat this as a real business.
So as far as within self-storage and the mobile home parks, are you still focused on development, or are you also exploring value add plays?
Yeah, so right now we're only doing value add because the feedback from the last round of raise from our investors is during the current economic times, they prefer to see cash flow immediately. And also, with the interest rate environment, the fluctuations, it makes development deals very hard to pencil out. So we had a deal in El Paso, Texas, a simple change from 7 to 10% in terms of the interest rate change. It means years and years more of time needed to break even, right? So that's why we decided to back away from that deal. And we are only looking at these, value add deals. So we're looking at, mostly anywhere from 15,000 to 40,000 net rentable square foot self-storage, mom and pop operated. And that's, that's the type of facilities we're looking for when it comes to self-storage. And we're looking at about 20-25 deals per week. So that's, the volume of deals that we're screening. And that's coming from, wholesalers, that's coming from other investors, coming from, our relationship in the industry. But we're also, we have targeted markets that we're aggressively seeking out for off-market opportunities on our own as well, right? So we just started building that out in 2024. that was a huge part of our acquisition strategy that we're, starting out.
Man, that's brilliant, man. I love your story. I love how you kind of set the trend in New Brunswick and then grew from wholesaling to, multifamily, single family. Now you're in self-storage. You do a little bit of, I believe mobile home. But yeah, man, big props to you. But we're running a little short on time, but I wanted to also discuss about something that you brought to us, to John and I, and just kind of like blew our minds. We're like, what's this about regarding visas? Getting a visa if you invest in the US. Kind of talk about that.
Yeah, I will say, the one that's, I actually still remember this. Anthony, you're based in California, so I feel like
Yes.
whenever I talk to you guys, it's always, I just call up John whenever I have a really good idea. Whenever I get really excited about an idea, I just call him up, right? So I still remember that conversation where I just called up John. I think John was probably in the middle of dinner or something. I was like, hey, John, like, I just thought of this. Like, this is crazy. Like, I gotta share this with you. But where it really applies to investors, on the international scale is something called EP5, right? So that's essentially an investment green card program, investment visa program. So where people from, outside of the US, they can invest anywhere from 800,000 to $1 million into a US development project. So that could be a business that's indirectly or directly creating jobs for the country, or they could be investing into a real estate development, right? So they, could be investing into like a healthcare facility. They could be developing into a hotel project that's creating, at least 10 jobs per investor. So each investor needs to put in 800,000 to $1 million. So in return, it's usually structured as anywhere from 5 to 10 years, right? In return, they'll likely get that money back out with some returns, right? Not a whole lot, but some returns, and they're able to get a green card out of it for themselves, but also for their entire immediate family. So what that means is you're able to tap into an investor pool that's extremely, that's extremely qualified. They have a lot of cash, but their motivation is different, right? They're not looking for a specific return. They're looking for security of how secure your project is, but they're also looking to provide a better future for their family, right? So their motivation is like maybe their kid it's accepted into a university in America and they just want to be there for the kids, right? So that motivation, it's almost like I need to be in the US. It's not just like, oh, it's smart to invest in the US. It's I need to do this, put 800,000 into this project so I can be there with my kids and leave my country, right? So you're essentially tapping into a whole nother area of investors. So the more I look into it, I went to an industry trade show in San Diego last year as well. It was a room full of these lawyers in their late 50s and 60s. And it's really funny. Most of them are white Americans, a lot of Jewish people there as well, a lot of Jewish guys. And they all spoke perfect Mandarin Chinese. It's like the funniest thing because most of these investors, as you can imagine, over the past 20 years, they were coming from mainland China. So all of these, American lawyers, they speak perfect Mandarin Chinese. So even to this day, I think the Chinese investors, out of all the EP5 applicants, they make up about 25% of all the applicants in the world. So the more you look into it, I realized, the Sacramento Kings Stadium, it was built with EP5 money. A lot of Marriott hotels were built with EP5 money as well. And a lot of multifamily buildings, the high-end, projects, they work with EP5 money. So I look into that, for my self-storage projects. The only problem is actually like we needed too little money. Like we only needed $13 million to do our project. And that's actually way too small for a project to make EP5 worth it. To make it worth it, like the lawyer cost alone, you're talking about anywhere from 150,000, 200,000, right? You're dealing with international securities here. And also it's an extremely lengthy process to get that approved. You have to work with the US Department of Citizenships. And that's an extremely lengthy process and really costly. So for projects, I think the lawyers told me if your project is less than, if you need less than $15 million in equity, it's honestly not even worth it to the EP5. But, for those of you listening out there, if you have, a trucking business, you have a logistics business, they need an influx of cash to buy equipment and that you can prove with an economist that you're able to provide, either directly or indirectly 10 jobs per $1 million invested in your company, then it's definitely worthwhile to look into EP5 funding.
Martin, We need to have a part 2 and part 3 interview of you. An hour is definitely not gonna be long enough. I know this. I think the next one, if we focus on like on visas and just EB5, that could seriously could take another hour or two. But you know, as Anthony stated, we are winding down. We just have a few more questions. So one question I have before we go on our lightning round is, what is Martin's superpower?
Yeah, no, I'm so glad you asked that. So I think it's just the ability to apply knowledge from one field to another field, adopting that blue ocean strategy. You know, we're able to leverage that, you know, for wholesaling, right? Wholesaling is extremely saturated in Ontario. A bunch of wholesalers there. Most of the content, you know, came from there. That's where, you know, most people learn how to wholesale, and that's where people wholesale. But I decided to apply that to another part of the country where there's absolutely nobody doing that, right? Same thing for self-storage. Roderick and I, you know, we decided to get into this space, but we're going only after the tertiary markets. So we're essentially applying what we see in the primary markets, applying that to markets where there's not enough competent operators. And, you know, same thing for visas, right? We saw that these hotel groups, they're leveraging this great program, but we decided to try that on our self-storage development project, on our real estate development projects. So I'll say, you know, if you're listening to this, I would encourage you, I would challenge you to think about, you know, the things that you already know that you're currently doing, how you can apply something from another field to what you're already doing to up your game, right? I think it's maybe because I'm an immigrant, but it's like second nature to me. It's very intuitive to do that constantly. That's how I look at things, right? Always trying to look at, okay, what do I know from another field that can really help me in this current situation? And always think in the terms of blue ocean strategy, right? How do I remain competitive? If there are too many operators out there, you know, if I'm doing multifamily and there are a bunch of multifamily operators out there, like, how do I stand out, right? How do I stand out from other operators? I would say that's my biggest key strength.
I love that. That's like, it reminds me of like, you're like the Bo Jackson of real estate. He had that marketing slogan, Bo knows. I think
Bo knows.
with cross training, and now Martin knows when it comes to real estate.
No,
All right.
I said, man, I always say this. I'm not an expert by any means. I'm just the best student in this field.
Amen to that. I love that. This next round of questions, Martin, because I know how stern your due diligence is, and whether it's the napkin underwriting or a lengthy market analysis. This next round of questions might be the most difficult questions you'll ever face in your life. Are you ready for this?
Let's see it. Okay.
All right.
Nice. Yeah.
You're stuck on an island somewhere off of Latin America somewhere, right? But you know, you do not have any family, friends, no people around you whatsoever. It's just you isolated on the island. But you are able to bring your iPhone. Which musical artist or album would you be able to load up on your phone? The only album or artist, so that way you could listen to it over and over again without listening to another artist. What would that artist or album be?
Wow. Okay. Probably Humble by Kendrick Lamar, I would say. That's probably like an album I'll have no problem listening to it like over and over and over again. Yeah.
Sit down and be humble, guys, and just always be a student.
That's it. That's it. And the fact that you can reverse it and it'll be a different experience, right? So I won't get bored.
Wait, you could reverse it?
Yeah. That's I'm pretty sure it's either that or To Pimp a Butterfly, where you can literally like put the songs in reverse order, and it's a totally different story. Pretty sure it's Humble.
But you're not playing it in reverse. You're just listening
No,
to
you're not playing in reverse.
Got it.
No,
Okay. Interesting.
just like the album, like the order of the songs, you can put it in reverse, and it paints a different picture.
Interesting.
Yeah.
Tells a different story, right? That's pretty awesome.
That's right. Yeah.
All right, man. For my question, I know you're a well-traveled man, so do you prefer tropical or mountainous area when you travel? And if so, where would you want to, what's your bucket list? Where would you want to go?
Yeah, I will say I definitely prefer the mountains. I personally I don't do so well in heat. So right now, even in Colombia, like I'm right now I'm currently in Medellin, so it's considered a city of internal springs. It's actually surrounded by mountains, right? I spent some time in Cartagena and Santa Ana, the coastal cities as well. I couldn't deal with it. It's way too hot, right? So tropical, I can't really deal with that. One country that's on my bucket list for some reason I still never been is Switzerland. I really want to see the Alps. I love skiing. I'm not a good skier, but I love skiing. Definitely will be quite an experience to see the Alps and ski in Switzerland.
Awesome, awesome.
All right, that's probably going to happen in the next 12 months for Martin.
Yeah, I'll be reviewing self-storage, calling sellers from Switzerland.
Yeah, man. And I'm just gonna put this in the universe while we're recording. I was like, Martin, now that you're into value add self-storage, find those deals. We want to partner up with you, man.
Yeah, no, we are super picky, and honestly, my investors are listening to this. We're gonna do a better job of like communicating what we're doing, because like on the outside it just looks like, what are you guys even doing? But like every single week, Roger and I were making at least 5 offers on these 25 deals that we look at, and we're just, the way that we look at them, we're super picky about what kind of deals we want to take on, and we're really aggressive in terms of how we offer as well, right? So that's why we realized, okay, to really remain that competitive edge, we need to have our own deal flow that nobody else has access to, right? So that's why we're building out this off-market acquisition strategy. But yeah, man, 9 doors down.
Brilliant.
I'd love to do business with you. I know you guys are more into value add, so I'm glad the stars are aligned.
I love it. I love it. So how can our listeners get a hold of you? Social media handles, website, emails, phone numbers?
Absolutely, yeah. So if you literally Google my name, Martin Mei, you're gonna come across our YouTube channel. It's under Meily Investment Group. On Instagram, you can literally look up Martin Self Storage, and my profile is gonna show up. But my handle is it's Martin Mei. But yeah, that way, reach out if you have questions about self storage, mobile home parks, the visa programs. I am a Canadian investing in the US, so I'm sure there's a lot of synergies there. And you heard the story, we used to do wholesaling. If you have questions about that, I have no problem answering either. I'm honestly an open book. You can literally ask me, I can show you my bank account, like anything. So.
Man, thank you again for taking the time to hop on the 9 Doors Down show with myself and Anthony. And for our listeners out there, please make sure to follow and give us a like on your favorite podcast platform. You can find us on platforms such as Spotify, Apple Podcasts, Google Podcasts, Alexa, TuneIn, and as well as YouTube. But on that note, this is another episode of the 9 Doors Down show, and we out.
Peace.